Good morning, everybody, from Bloomberg World Headquarters. I'm Carol Massar, Bloomberg anchor for radio and television. This morning, we've got an edition of Bloomberg Businessweek Talks. It's about car ownership having had a really good run. And I've got two great people to talk about this subject with. These are our go-to guys when we want to know about the auto industry. Bloomberg News U.S. Autos editor Craig Trudell, who's in from Detroit. And we've also got Kevin Tynan. He's our Bloomberg Intelligence Global Director of Automotive Research. You do all this research, you do all the financial digging into these companies. We're going to talk about the mobility revolution because there's so much going on. And we want to talk about what the auto industry is doing to kind of embrace it with all these changings. We're going to be answering your questions. You're part of this event. So leave them in the comments on Facebook, also on YouTube. And you can tweet us at BW, of course, for Business Week, and send them over as we're talking. Keep them coming. We've got some questions that have already been sent in, but we want to make you part of this conversation. So first of all, Bloomberg Business Week did a great cover story, and they asked the question, are we at peak car? And they said auto sales in the U.S., after 4 record or near record years, they're declining this year. And analysts say they may never again reach those heights. At the same time, we've got, 1.3 billion vehicles out on the road. So I'm curious, Kevin, Craig, let's kick it off with you. What's going on?
So it was funny when we sort of started with this project. It was around the time of the Detroit Auto Show, and we sort of did a bit of taste testing with some of the executives who were in town for the show
this year.
It was very reminiscent of some of the pushback that some of the reporters on this story got for a story that they did 5 years earlier, where they talked about this concept of peak car that was just at that time starting to be sort of a conversation. There was a lot of resistance still to this idea that, as long as we have population growth, essentially we're going to have growth of cars. But I think a lot of the questions about whether or not we are at a point of peak car are really as much about sort of demographics and these trends of urbanization as much as anything, because you have just a rise of all of these alternatives to owning a car that could contribute to a serious decline in demand for them.
Right. It's the whole sharing economy. We've got scooters. Kevin, we've got lots of other things going on.
Yeah, and I think that diversity and variety is actually the point, right? So, and we see it in electrified drivetrains, right? Electric vehicles, whether it's ride sharing, whether it's mass transit, whether it's private ownership. I think to satisfy the vehicle miles traveled of those demographics, we need options. And I think rather than this being like a zero-sum game between me jumping on a scooter to get home or owning a vehicle, it's both, right? There's going to be times where I need other forms of transportation to get to where I'm going, but I don't see where nobody ever owns a car, privately owns a vehicle anymore, because you're going to need that variability, that variety, those options.
Well, and like you said, we've had these, discussions about peak car before, but I do wonder if something has shifted. We've seen it in retail, the sharing economy, where I look at some of the teenagers out there or my nieces who are in their 20s, and they don't seem to care if they've got a car or not. They need it to get around, but it's not so crucial, it seems. Have we seen something change?
I do think that there's really a case to be made for that. There are a few different things contributing to that. I think, there was a time when the car was seen as sort of the ultimate symbol of freedom, and I think that was definitely a seed that was planted, by companies in Detroit and Stuttgart and Tokyo.
It was a rite of passage in many ways,
right? And I think there's a little bit of that flower sort of wilting a little bit, where I think you do see this sort of negative drawbacks of owning a car. And sort of the lead anecdote of this story that Keith Naughton and David Welch did out of Detroit for us is a guy in Boston who was willing actually to pay roughly $20,000 a year to basically use Uber and Lyft to get around.
He's a tech executive, so he can afford that $20,000.
And he's definitely an extreme case. I don't think that this is sort of a model for the future here, but he is very much a person who sort of demonstrates or is an example of this idea of like, I don't actually want to have to dig my car out from the snow every morning in the winter, and my time is valuable, and I would rather save the time of and the hassle of maintaining and having a car, and pay more actually to be driven instead of own my own vehicle.
I'm thinking about, those folks that are listening to this. Like if you live in my neighborhood where if you move a car, you lose your parking spot. Like there are times if you're going out at night, you're like, I'm going to take an Uber or Lyft. So you do think about some different things. Why are we having this conversation now? Is it because the Lyft IPO is coming and we're waiting for the Uber IPO? Why is it, Kevin?
Well, I think and it's interesting, I was having this discussion with another Bloomberg intelligence analyst yesterday in a different sector, actually in airlines, about, I can't remember a time where we had, and I'll call them questionable business models, getting so much valuation. And I'm thinking about...
Like 20 billion, is it right, for Lyft and counting?
Yeah.
Potentially? North of.
Yeah, and I don't mean to say questionable in a bad way. I'm just saying that, as an analyst, as you walk down the income statement and you get to that bottom line and you say, okay, why would this be valued the way it is? And I'm thinking, Tesla is one of them. When you look at their valuation per unit globally compared to the Toyota, Volkswagen, General Motors of the world, it doesn't really reconcile. Uber and Lyft would be the other examples. The other one too is in retail, which is a name called Carvana, which is doing this sort of online-only pre-owned vehicle that's getting this valuation that just it's astounding to what they're getting for how big they are.
And are they profitable?
No, and the value that they add in the process. But the idea of like, you don't have to talk to a salesperson ever. You can do this process all online. And that goes back to, the previous question about, when we were growing up, that car, your bicycle was about that freedom and it was about connecting with people. My sons, who are, college age, grew up connected to people virtually, right? Like they play esports and they're on a team with people in Europe.
Right.
So they're connected in a different way than we needed to be connected when we were growing up.
I just think it's kind of crazy. And if I think about growing up and it was like you never get in a car with strangers, and now we do it all the time and we don't think twice about it, right? So I want to get to some of the questions that we've got that were sent in. Vincent sent in one, and he wants to know the specifics about kind of our time frame. So he says, what is your best estimate of the time horizon for the change to cars as a service for the majority of drivers, right? So it seems like we're getting to mobility as a service versus so much about kind of the car manufacturing. What's your thoughts on that?
Yeah, and I think to Craig's point about the demographic shift, right? If we have a lot of people living in urban areas, then maybe that shift happens faster. I think from a business case perspective, to me, I think the full level 5 self-driving vehicle is really the key to everything. I'm not saying I think it's possible. I'm not sure the science makes sense or the business case makes sense, but I think that shift is different if you can take the driver out of the car completely and make that business case viable. And now this idea of peak car or no private vehicle ownership because they're all zipping around by themselves.
Right.
Whether that's actually possible, I'm skeptical of that, but to me, that's sort of the tipping point. If we ever achieve level 5, or when we achieve level 5, I think that the world is different.
Is that what we call it, level 5? I didn't know that.
That would be no pedals, no steering wheel.
You won't put a time frame on it.
I'm not even sure it's possible.
Yeah.
Well, and so I think the answer in some cases it's already happening, where you're actually seeing with some cities in particular. I think they're going to increasingly sort of drive the bus here, pun intended.
Yeah.
Where they are really cracking down on the problems with pollution, the problems with congestion, and really getting serious about sort of car bans or preventing people from being able to drive into city centers.
Congestion taxes, right? Or
exactly, and you see this in Paris, where people are prevented from being able to drive into the city on certain days of the week to cut down on congestion and pollution. Where you'll see more and more of that happening, and you're seeing it as well in places like San Francisco, where just in the last couple months, I went for a visit, and it was amazing to me how much Uber was pushing their pool option, which meant, to your point about getting into the car with strangers, which maybe would have been unthinkable, years ago. But this is really something that's being pushed on Uber as much as Uber is the one pushing for it.
Right.
And it's because they're sort of getting pushback about how much are you really solving for the problem of congestion and the environment when you're actually contributing to more cars going into the city centers at peak time. And
we're going to get into that with China because we're seeing pushback there because they're so concerned about pollution. Ian had a question, and I want to bring this up. He says he too wanted to know the timescale, for alternative powered vehicles to begin to dominate the commercial and individual market. But he says, what is the time frame given a lack of charging facilities for electric and hydrogen-powered vehicles, the dominance of Middle Eastern oil producers and U.S. as an oil producer, and the low capacity of electricity generation globally? I mean, those are big obstacles. Huge.
And big question.
Yeah, right? Like, we haven't figured that out yet.
Right, and I think also, again, this idea of options and variety, to me, I look at vehicle electrification, whether it's plug-in hybrid or battery electric, as a drivetrain option. So I almost equate it to a vehicle segment, right? There's minivans. Not everybody wants one. Not everybody needs one. But they exist. Sports cars, same thing, where I feel like for now or for a reasonable amount of time, that's a drivetrain option. It's going to work for some people based on this infrastructure or their needs or their perception of emissions or where they want to be in terms of global warming and that whole issue. So those options are there. Not everybody buys a Mustang. Not everybody buys a minivan. So I think for now, I look at it more like a vehicle segment than to say everybody will have one of these maybe someday. Bloomberg New Energy Finance says by 2040, it's 54% are electrified vehicles.
Over 20 years ago, or 20 years from now. So.
Yeah, which is reasonable, assuming the costs come down, and that's what governments are pushing for. I mean, governments are a big part of that equation as well.
Well, it's interesting. This guy, Stuart writes in, I love that he wrote this in. He had a bunch of questions, and he says, it sounds like a lot of hoorah or hoo-ha maybe about people switching to bikes, which cost taxpayers lots of money and produce trivial results. He talks about having 5 kids. He said, only my youngest, they're ages 33 to 58. He says, only my youngest is anywhere what you're talking about, walking, using Uber, Lyft, and public transportation, yet he also has a car. He says we grossly underestimate the time for the type of shift like this to take place. But it's interesting because I think until Elon Musk started really pushing things, this was even further out. And all of a sudden, everybody kind of woke up and said, oh, my God, he's doing it.
Right, and especially on
I feel like there's a Musk factor.
Yeah, especially on the electrification side, to Kevin's point. But I do think that the person who wrote in has a point that there is a lot of hype involved here as well, and that we have to sort of acknowledge. And I think that person who wrote in sort of alludes to. And you can see, just to sort of address the previous question too, about whether we have the sort of ability to be ready for electric cars. As much success as Elon has had with Tesla, you are starting to see a lot of complaining from some of the true believers about, man, I have to wait in line for hours to get my car charged.
Right.
And there are a lot of concerns by the companies that remain skeptics about electrification, about also just how clean the charging is going to be, especially for supercharging. How much of that is going to be powered by coal, and then are you just sort of like, how much are you helping things really? So.
Well, I know, well, first of all, there's a statistic that you mentioned. You guys have to hear this one. How much in terms of EVs in the United States?
1%, 1.3, 1.4.
And what about it globally? Is it
about the same? About the
same. So it's a really small.
China's 2.8 or whatever it is. So they sort of tilt the balance, above 1 or in that range of 1%.
So it's really small market penetration. I mean, why is it electric vehicles that make sense as being the next step, or something else? Considering that you still need often coal-powered, electrical plants.
Well, I
to
think
charge
you
all
still
these
have
batteries?
from the car maker side. I think they, to your point about what Elon has done and sort of changed the perception, I think they're really caught in this bind where they still have some real skepticism about how quickly this will take off.
Yeah.
But they have to address the fact that the cool factor that Tesla has built for itself and Elon has built for Tesla is immense and has been attracting a massive valuation. They also still are sort of holding on to this idea of hybrid is going to make sense in a lot of applications, and that includes on self-driving vehicles where the systems that run these test vehicles, what they are now, that are not quite ready for prime time at a level 5 capability. Right now, they're huge power-sucking systems that do a ton of computing. And so you've heard Ford make the case that they see those initially being deployed as hybrids. But to go back to the concern about the extent to which the regulators and the whether it's the federal or state or city level, whether that's going to be enough for them. If you have someone like Mary Nichols out in California who is a very admirable environmental fighter, she was very critical of Ford for coming out and saying that hybrid is the way forward, and said that's not enough.
Right.
So there is going to be a lot of confusion, a lot of sort of frustration both on the regulatory side and the companies on how we sort of can come to an agreement on what's going to be workable.
Because it's amazing the amount of coverage we spend on it, and then to hear that statistic that it's only 1% of the marketplace.
And I think also one thing that is not talked about enough is the profitability, right? And I think there's this idea that legacy automakers don't have the ability to do it. They can't match Tesla in technology, innovation, disruption, whatever it is, when it's really just that inactivity, right? And if you're General Motors and you brought Chevrolet Volt and Chevrolet Bolt to market, right? You know those costs down to the penny.
Right.
Right. You know what you can charge. You know the business economics of that platform, of that nameplate, and then you don't really have to look too far at Tesla's quarterly reports to see, profits in the third quarter and fourth quarter without getting too much into, the SG&A line or the R&D line that were cut severely to get them to profitability in those 2 quarters, and say, okay, well, that doesn't make a ton of sense as a publicly traded company to run into this space and know I'm going to lose money, right? So why don't we just walk into that a little bit more slowly when the demand and the sustainability of that profit structure makes sense?
I love the skepticism that's coming in. A question we just got from Tonya, and she says, we live in Texas, so probably, but I cannot believe kids today do not even want a driver's license. Do you foresee that happening? I mean, right? I mean, you go around the country into suburbia and so on and so forth, people are still driving a lot of cars.
When we were talking about, before we went live, about the idea of the fact that this is going to be a different sort of evolution depending on where you are. And so I grew up in the country in Michigan. There were no, and there remains no Uber and Lyft in the town that I grew up in, and so there is going to continue to be large swaths, especially of this country, where people don't have any other choice to continue to own cars. But we're talking especially about, given the demographics and the growth of cities and the amount of people moving into cities and out from rural areas, the fact that this is going to be a really important sort of factor in where the car market goes in the years to come.
In our coverage in the magazine, we talked about worldwide people are migrating to megacities. Check this out, everybody. Expected to be home to 2/3 of the global population by mid-century, where, as we know, an automobile can be an expensive inconvenience.
But even still, though, right? So,
Kevin's not buying it.
Well, but you still have to move those people around. So whether I own the car or the Uber driver owns the car, somebody owns the car. And I feel like right now, congestion is actually worse because you have all these people driving around looking for rides. And maybe we're just pulling people from mass transit. We're taking people from the buses or from the subways, and it's actually making the situation worse.
Yeah.
Right? Because you have people.
I don't know. My train was pretty crowded this morning.
Right. And I took the shuttle in, and it was, we were in the bus lane, but there was plenty of traffic still coming in.
Right. Well, and it's just also interesting, too, to watch where the companies are putting their money. And so, you see Ford recently buying a scooter company. So
right.
there is definitely a sort of tacit admission on the part of the companies and where they're investing that they do see some risk here of the rise of megacities. And you've heard Bill Ford talk years ago about this idea that in India, we're not going to see 2-car garages like we've seen here in America, or sometimes 3, 4, 5-car garages. That it's not going to be applicable in the rest of the world. And so I think
micromobility. There was a great story about, was it Electra Mechanica vehicles? It's a Canadian upstart, right?
Yep.
And they're talking about these one-person or 2-person cars.
Mm-hmm. Yeah, these little 3-wheeled vehicles, and those have been around for some time, and we've seen them sort of come and go. We've seen, just to go back to Ford specifically, we've seen Ford's bets on these sorts of spaces come and go, where you can go back and find pictures of Bill Ford wheeling out a bicycle at an auto show a few years ago. That sort of went away and is now sort of coming back. So I think you're going to see a lot of sort of ebb and flow in these spaces, but the car companies are really doing a lot more experimentation than they were 5-10 years ago.
And lo and behold, working with one another. They're rivals. They're now kind of crossing back and forth. Alan writes in, he says, is the automobile industry's problem peak car, or is the problem a rebellion against the automobile industry and their manufacturing? Is the problem who owns the cars and how the cars are owned, or is the problem the cars? Which I think, go back to the financial crisis, right? And the rescues that we had to do for General Motors and others, right? And you realize that these industries got stale, lazy, and they had some problems.
Yeah. Well, and just a huge build up in liabilities. And yeah, I do think that's a very valid question. I think you see a situation too where the auto companies sort of see a future where they may actually see the rise of these sharing models and autonomy and electrification, but they also sort of see an opportunity here in if we're talking about megacities that do feel like there's a congestion problem and we're just making things worse. They see a situation where there could be some potential for a lot of cars to still be on the road and for them actually to be utilized sort of around the clock and throughout the day, where there's going to be an opportunity maybe for like a faster cycle where because the cars are put to such great use, they'll actually only last so long. Right now we're in a situation where even after car sales have sort of plateaued, the vehicle population is older and older and older, that cars are lasting longer and longer. So you have to fault the companies for cars that pollute, cars that are unsafe and lead to problems like congestion, but you also have to give them credit for the fact that they're making much better cars than they used to, including out of Detroit.
Yeah, the average age is 12 years now. So, on the one hand, like you said, they get dinged for, hey, build a better car, and now it lasts long enough that...
Cars don't rust out like they used to.
Yes.
But that does contribute to this problem of my car's lasting longer, I don't need to replace it when we talk about kind of peak car sales.
Well, and that's the issue too, right? And it's to your point, it's a horrible business, right? Capital intensive, low margin. It's about scale globally, right? It's about selling a whole bunch of units at a really low margin.
Well, that's the whole thing between, for Elon Musk, right? And the Model 3, the whole idea was a mass market car, but he's struggling with that.
Yeah.
It's a tough business.
It's a terrible business, right? And which is surprising he even got in it in the first place. So I think you have this situation where, from an investor's perspective, you're looking at this business and you're going, why am I thinking about this space where margins are terrible, and I think there's some pushback on that as well, not only just to the product, but as an investment.
Well, let's do that. Bruce has a question. What present U.S. auto manufacturers will remain manufacturing cars in 5 years' time? That's not so far away. What percentage of electric cars operating in the U.S. in 5 years will be manufactured overseas? And then we have a question about investors. Do we have any idea?
Well, 5 years, they'll all, I don't want to say all of them, but most of them will still be manufacturing cars in 5 years. And I think if you even work backwards, right, even this idea of megacities and ride-sharing, ride-hailing options, right, think about the population, the demographics, and we have to cover that mileage, right? Those vehicle miles traveled. And
Right.
maybe this accessibility increases people's needs or increases the vehicle miles traveled. So those miles have to be covered by
Something.
some fleet, whether it's 1.3 billion or more or less. And if it's less, right, those vehicles are doing more work, right? So maybe they're replaced faster. So, I think if you look at the accessibility that's needed to be covered, somebody has to own the vehicles, whether it's the manufacturer, whether it's a fleet company, whether it's the individual. We have to cover the mileage somehow, and the mileage is going up.
This is a great question from Pat. She says, one of the most difficult things is to reorganize the city infrastructure in order to accommodate EVs and the potential smart mobility. It's easy when it comes to new cities, right? Mm-hmm. But older cities such as London, Rome, Athens, Paris, how can they rebuild their cities? So the question here is mobility for everyone or just for the new megacities?
Well, and you see really spirited debates about exactly that question with the rise of someone like Elon, right? Where he has made these comments about that have been sort of perceived as very anti-public transit and sort of been criticized for that. And sort of gotten into his sort of signature Twitter fights about that. So
the Boring Company, I'm all in. Based on my commute this morning, go ahead and build these tunnels that make it easier.
But there are also critics of who are sort of in this sort of city planning who are raise concerns exactly like this person raises of it's going to be very costly,
right?
If you're just sort of adding additional lanes, aren't we just sort of like enabling more congestion than we would have already? And is this really the solution? And so I think to Kevin's earlier point, what you have to do if you're a city planner, a regulator, is approach this with all of the options. And I think what we're seeing is just a rise of more and more options where who would have thought, 10 years ago that you would see scooters all over the place in Detroit, right?
But they're there.
But they're there in the Motor City.
Or even the bikes, right,
Yep.
that have come into major cities.
Yeah, and to this point, I think about this, and to Craig's point, like we have scooter. I remember the first time in Detroit tripping over one, like somebody left their scooter in the middle of the sidewalk.
And there's complaints about that. So cities are kind of figuring this out.
But I think the idea of level 5 and that being really the tipping point, right? If it were possible, that level 5, and you think about what's needed to make that possible, which would be this whole vehicle to vehicle and vehicle to infrastructure connectivity. That's consistent all the time. And I think, I only drive 8 miles to work, and I'm like, we can't fix the potholes
right.
on
so
my
how are we
8-mile drive, yet we're going to rewire the entire city for this self-driving, because the only way, to me, it works is if the vehicles are talking to each other and they're talking to the infrastructure. And I'm saying, where does that funding come out? How does that happen?
You've got to say, like the cars, I think even my car, like on a highway, it works.
Oh, yeah.
They're talking to each other already, and you can see how that could work. I don't, downtown and so on and so forth, I think that's going to be more difficult.
It's really tricky, and it's hilarious. There have been some great stories done the last few years about sort of the peak place where you can go to for all the hype about all this stuff is Las Vegas and CES.
Yeah.
And it's hilarious. It's deeply ironic that there's all this hype about this stuff, and if you want to get around Las Vegas for that show, good luck.
It's a nightmare.
Huge taxi lines, tons of traffic, tons of congestion. It's terrible.
And the funny thing was, not this CES in January, but the year before, it rained, and it hadn't rained in 280 days or something, and so there's the rubber in the street basically that lets it expand because it gets so hot. Well, that gets slippery, and then it was just
What a
it was
mess.
mayhem.
It's a nightmare.
It was mayhem.
So I have a couple more things I just want to get to, and then we have to wrap up. Kevin writes in, and it's a question I think for you, because it's an investor question, which I think is so relevant to all of us at Bloomberg. He says, because first of all, you've got GM plowing $1 billion into self-driving cars. They're planning to debut a robo-taxi service later this year. They've got $500 million in Lyft. Daimler and BMW pouring more than $1 billion into a jointly owned car sharing. There is billions of dollars going into all of electric vehicles, and self-driving. So Kevin writes in, as an investor who holds stock in several automobile manufacturers, I'm concerned about eroding profit margins across the board. So many companies are making great cars that it's difficult for any one company or brand to set itself apart enough to keep up those margins. Add in massive investment requirements for new technologies, and I've begun to wonder if holding my underperforming automobile stocks makes sense. And they are underperforming, the S&P this year as well as over the past year. Kevin, that's right up your alley.
Yeah, so the autonomous features, even if it never gets to the level 5, I think are helpful. To your point, driving, New York to Florida in the middle lane on, I-95, you don't need to be engaged all the time. Same thing sitting in city traffic. You probably don't need to be engaged all the time. And I think what the smarter companies, and I think, Toyota was one, and Ford's Argo AI is working on, is that handoff between the two. Because I think that's the big problem now, is that you engage a sort of autonomous system, and the machine has 100% of the, right, you're supposed to be watching and paying attention, hands on the wheel, but you really don't have control during that period. The machine has 100% of the control until something goes wrong and it doesn't know what to do, and then it punts 100% of the control back to you, whether or not you're ready or not. And I think what you're going to see a lot of that investment going towards is that transition. So rather than replace one or the other, let's make that sort of complement the ability of the driver, which should never really be at 0%.
Right.
Right? And so, and that's my point, is I'm not sure we ever get to the point where the machine does 100% of the time.
So what does this mean for auto manufacturers? And if I'm an investor and holding those stocks, what do I do, right?
Well, I think right now the valuation, the hype is towards this, we're going to do level 5, and then we're going to change the world with this level 5 because you don't need to own your car. But then, and I think that's wrong. I think a lot of this investment is going towards making vehicles safer, more useful. And I think we go to that end game, right? We go to full self-driving, we go to electrification for everyone. Nobody ever dies on the highway anymore. And I don't think that's really the goal of this investment, right? Automakers are some of the most, and always have been, some of the most innovative companies out there. But they get, there's this concept that they just bend metal in the shape of cars. So there is value to that investment. There will be return on that investment.
There did come in a question from Daniel. I'd like to know your thoughts of developing countries and how car ownership will be affected there. And we think about China. Their auto market has been growing for year after year. Sales did fall, I think, in 2018. We saw some slowdown, and I think it was their first drop since the early 1990s. So emerging markets, or China, not the great savior when it comes to the auto industry?
Well, I think that's one of the things that when we would hear pushback in January in Detroit, it was about these places like China, where there's sort of this expectation that this is just a blip that we're seeing and that we'll see a return to growth. And I think what you have to sort of question is whether there are going to be places in the world where cars will not catch on like they've caught on in this country or did in sort of the post-war boom.
I mean, look at the financial sector, right? You think about China, they're doing everything on their phone. Emerging markets are doing everything on their phone. It's not credit cards and other things like we see in the United States.
And there are a ton of people. There's a lot of growth and wealth, and so generally in the past decades, it was a safe bet to see those things coming and to see sort of car ownership and vehicle sales follow. And I think what this story did such a great job of sort of capturing is that those assumptions may not be safe anymore. That you may see cases where developing countries don't turn to the car like we saw places like the U.S. and Western Europe turned to the car in sort of the boom of past decades.
Right, and I think it would be equivalent to putting, a landline on the wall.
Right.
Right, and then going to
Does anybody even, there's a whole generation that doesn't even know what a landline is.
You would just jump over that technology altogether and get to the...
We do have to wrap up, but I just want to get some final thoughts for you guys, because the question is kind of, car ownership, it's been a great thing, had a great run. Is that it? I mean, are we going to look back in 10 years from now and say, okay, this was peak car?
Yeah, I think there are still, to the company's credit, they do have these reasons to think that, even if we don't get to near the ownership rates that we've seen in sort of the Western world, if you will, there is still a potential for us to continue to grow. But I do think that with the rise of technology, with the rise of these other options that could enable people to get around just more efficiently and more safely, there is sort of a real open question about whether we'll get to the levels that we saw just in the last couple of years ever again.
Right.
Yeah, and I think, and it might be semantics, so maybe we were or are at peak car, but it will still be a lot of car, right? So, and China's a good example.
It's not a case of, this is this great picture, I don't know if everybody can see this, but the cover of cars piling up.
Right.
You're not expecting that anytime soon?
No. And there'll be a lot of good cars for me to buy then. But, and China's the example, right, where it has the first year where it hadn't grown since the 90s or whatever it is, it's still 20+ million vehicles a year. So
right.
Even if that plateaus or declines a little bit, it's still a lot of units moving, and I think that's the situation globally. Are we 100 million globally? Are we 85 million globally, right? And if we're in that range somewhere, there's going to be continuous investment in the space. There's going to be new options, but there's going to be profits to be made even at that level, even if we don't go to 85 to 100 to 150 to, even if the peak is passed, it's still going to be a lot of vehicles.
It's still a pretty healthy industry.
Yeah.
And there's still going to be a lot of manufacturing. Kevin and Craig, thank you so much. Really great stuff. And we do want to thank everybody. I know I didn't get to all of your questions. We could have kept talking. But thank you so much for joining us. And do be sure to check out Bloomberg.com for Kevin's research, for Craig's writing. Lots of great stories on the auto industry. Do be sure to check out, too, Bloomberg Businessweek on the radio and on the weekends on radio and TV with myself and my co-host, Jason Kelly. And have a great day, everybody. And be sure to join us for another edition of Bloomberg Businessweek Talk.